Welcome, everybody, to this week's Newcomer. It's Tom Dotan here, joined by Eric Newcomer of Newcomer. We got Madeline Renbarger and our special guest, Kate Clark, my former colleague from The Information, joining us to talk about a piece that she wrote at Bloomberg, where she now is.
Not The Information. We're trying to remind ourselves of Bloomberg.
We have 3 former information people on this podcast.
Information reunion over here.
Yeah.
Very fun.
Yeah. Anyway, Kate, thank you so much for joining us.
Thanks for having me. Excited to chat with you guys.
And we're going to be talking about the story that you wrote recently about the difficult fundraising climate for venture capital firms. The headline on the story is, "It's never been harder to make it in venture capital," which is it's a stark message. It's like a very firm, paternalistic thing to tell people. You're never going to make it. Or if you do, you're one of the luckies.
I don't think we would have been so extreme with maybe the setup or the headline, but you can see in the story that the data tells a very specific story. It's quite grim. It's less than $5 billion that these emerging managers, which are people who have raised 3 or fewer funds in VC, like the numbers are quite bad. It's really low. And for first timers, like people raising their first fund, it was around $1 billion, and we're almost halfway through the year. So I think that's why we sort of went so harsh at the headline, and from chatting with so many emerging managers, like it's really hard to raise a fund.
It's so hard to capture failing venture capital firms because they sort of die slowly. I mean, even in the story, you're sort of talking to some of the people who are kind of making it.
Yeah.
Who do we know for sure is, you mentioned a couple that are like actually calling it quits.
This was something we were challenged with, which is like, can we get current examples of people who are considering, or not considering quitting, but like who is willing to talk about how incredibly difficult and disappointing their fundraising process has been. Like, as you might imagine, people don't really want to like go on the record. There are a lot of conversations that were had privately, but people don't really want to be the face of this. So as you probably noticed and others did, like the picture we used for this article was people who have success.
A good firm. Yeah.
Yes.
Chemistry, right.
Which was kind of funny.
But you mentioned like Foundry called it quits. I think there was another one you mentioned.
Yeah, Countdown Capital was a good example of like an emerging manager that called it quits.
Didn't OpenView shut down in 2023 or something? There's been a few high profile ones that really shut down, like publicly, right? Versus,
and
kind of whittling away.
Kind of an extreme situation where like a key man leaves and they like all of a sudden implode. Like there are all these outliers that are examples of this, but like didn't really speak true to the trend, which the trend is like, it's hard to fundraise. People aren't actually able to do it. And a lot of people are just like quietly not succeeding.
Well, yeah, I wanted to zoom out, and Kate, I wanted to have you on. You're obviously sort of the expert on what's happening in venture. And so you're seeing the same things as us. Like narratively, it has been such a complicated time because it's like, if it hadn't been for AI, we would have been clearly in a miserable downturn in startups and venture capital. And so then the narrative would have been clean. It's like everything's down. Pandemic was the hype time. Like funds are pulling back. Like everything's bad. But instead we had all this excitement around AI, hype or not, tons of funding, though some of the funding came from, public companies and crossover funds and everything. But it was a great moment to keep the party going in what otherwise would have been a brutal downturn. So that's one complexifier. The other complexifier, of course, is Andreessen Horowitz, General Catalyst, Lightspeed don't seem to have problems raising, even though it's a hard time in venture capital. So why are emerging managers having a hard time when there is this sort of asset class that's keeping momentum going and the mega funds are keeping the lights on and raising larger funds? Why do you think emerging managers are struggling?
I think it's just like a flight to quality, or the limited partners, like the endowments or just like the rich people in the family offices. They, in times like this where it's so uncertain and so volatile and, you have such an unpredictable president and all of these factors, you want to pile your money into, if you can get access, into Sequoia or Founders Fund or Andreessen, because they have a track record of, 10, 20, 30, in some cases, 40, 50 years. And so it feels safe and it feels comfortable. To be clear, like it was always hard for emerging managers. So it's just like extra hard now. And because of that, I think it's really just about reputation. And that's why you do have Chemistry, which is the fund we talked about. That is the outlier that very quickly raised 300-ish million for their debut fund. It's because all these people come from those name brand firms So they have the perfect recipe that LPs
Right.
are excited about.
We were talking about like Dimension Capital last week, where it's like two of them are from Lux, one I think from Obvious. Why? I'm asking you the questions I can't answer, so they're not easy. But why do you think it is the case that there's this narrative that, oh, you can spin out of the legacy funds? There was like, oh, you want to be a founder, or you want to have been a great angel investor, and like we had the sort of Lockie Grooms and the solo founder, and a lot obviously still going strong, and Nat Friedman and Daniel Gross. I mean, that's basically a firm at this point. But anyway, why is it the case that now the narrative is you need to be spinning out of a big venture capital firm to raise?
Yeah, I do think that there's momentum for spin outs, which like, so people coming out of these big funds.
Right.
I think it's the same reason. Like they have on their resume, they spent 5 years there, so LPs feel like, oh, they know how to do their job.
Right.
They have relationships. Like I think it's the same as why people feel like they need to do a stint at like a big tech company, because you get that good experience and you build your
Right.
network. Like I don't think you really, to be a good investor, you obviously do not need to work at those firms. And actually a lot of people leave those firms because they don't feel like they're getting any good experience or like actually hands-on with founders. But I think
Right.
it's the perception LPs have, which is that they know what they're doing. They have the right relationships. And like, especially if they get support from the GPs and the fund, like the fund
Right.
invest, that really, really helps.
If you were to look back at the last decade or so of startup and venture capital, and I've been thinking about this a lot because a friend of mine is writing a book about kind of the ZERP era. And what would you say was the peak? What would you say was the moment in which the getting was so good that you could launch these as an emerging manager, raise the LP funding, get maybe $50, $100 million fund off the ground fairly quickly, and get a return such that like you suddenly were in the game, even though you weren't a major player, you weren't a name brand, you didn't have maybe the deal flow of like a top tier firm. Like what era would you kind of pinpoint as like the height?
Probably 2021. I mean, like maybe 2020. Like there was a period, Eric, maybe you remember, like when did like Brian Kimmel and Lockie Groom kind of like raise their first?
Well, there was sort of
fund?
like there was the pandemic fake out, right? It felt like things were as crazy as they ever could have been. Almost like 2019. I think Lockie and people were coming on earlier than the pandemic, but then it's like we get scared and like people pull back because it's like, oh, the pandemic's gonna be terrible for the economy, and then everyone realizes, oh, actually it's gonna tank interest rates, so it'll be great for forward-looking investments like tech. Everybody's gonna be sitting at home, so money can move much faster, and everybody's gonna be shifting to software, so all of a sudden all the tech stuff is gonna do really well. And so then it was like true mania. It was just insane period of time.
Anyone could raise money. I mean, there was just a period where like if you worked at any startup, didn't matter what it was, you could like quit and raise $7 million in like a month. It's what it felt like. I mean, it was ridiculous. And most of those people don't still even have funds. I think that kind of like that chapter was short-lived, but like it was absurdly easy. And a lot of those people also invested in stuff that got marked up way too high, was overvalued, and like they don't have good returns at all. So I think that's why they're no longer.
One thing that's amazing to me is like in 2021, I mean, I was saying like, this is wild. The party's crazy. Like I literally had stories like emperor has no clothes sort of situation. But at the same time, there was the belief that like all the exits that were happening in 2021, they were sort of the fake exits. It's like, oh, these are like the SPAC companies and the shitty ones that everyone's unloading. And the real exits, they should come like next year when the party keeps going. And then the market corrected at the end of the year. And it was like, okay, that's not happening. What's your view on like the fact that maybe we'll see, Chimes coming? We just had Gusto on stage at Breaking the Bank. Obviously, Stripe and SpaceX and everybody are sort of perpetually private. Like, where were the exits that would have kept venture in better standing with limited partners?
That's the source of the crisis. Like there are no exits. And it's funny when you see like two IPOs, like there was one, what was it? Hinge Health last week.
Yeah. Hinge Health went out last week. And then, and then Omada is looking to go out maybe next week. Yeah.
Right. And people get so excited and they're like, see, like IPOs, but like that does not solve this problem, which is that there are like hundreds of companies that are overdue to exit, whether it's M&A or IPO, and it's not happening. So until that changes, like this crisis for emerging managers and established ones who are struggling isn't going away. But I don't know what you guys are hearing, but it doesn't seem to me like any of those things are expected to pick up dramatically anytime soon. I mean, there's been a little bit here and there and like Hinge Health, but like it feels like it's still quite stagnant.
Right. I mean, Wiz was huge. This Johnny Ive thing is huge. Okay, Tom, weigh in on this. This is a sidebar. Is the Johnny Ive deal like a huge? It's $6.5 billion. Like on paper, that should be a like transformational.
Yeah. Thank you, Kate. It's a stock deal. No one knows how we don't know how the OpenAI story is going to end up. I mean, they haven't even converted to being a for-profit company.
But I'm saying they could be a liquidity provider. Forget the investment returns from investing in OpenAI. They just acquire everybody and like.
If they do it with cash, we can start to talk. But like, if you're an LP and you're ending up with like essentially a profit participation unit from OpenAI right now, with the hope that it becomes a reasonable semi-liquid stock, then sure, we can have that conversation.
Didn't that just make Johnny Ive like incredibly more rich? I don't think that it put a lot of cash in the hands of venture capital firms.
Yeah, I don't know the cap table. The information had something. I didn't dig into it.
I'm completely guessing, but I would imagine that he owned a majority of it. And like, I know they had a little bit of investment they'd done, but I don't think it was a ton.
Yeah, it's certainly not going to be like a windfall for, the early investors that backed just him.
Right.
One question I had, Kate, to jump back a little bit, there's, the conversation around the big guys getting bigger, but there was also this huge push around like seed funding really taking off that kind of was more resistant to the downturn, and seed sort of continued to go. People wanted to back, YC companies. That was a sector that had a little more resilience. Where kind of are the earlier funds like that, where of course the middle funds and someone who's trying to raise, like a $500 million to $1 billion fund are really struggling? Is it the same for the really early people, or is there a little bit more breathing room there?
Yeah, like you'd think that if you're raising a small seed fund, it would be a lot easier than raising a mega fund. And I think that like the challenge is a lot of LPs have a minimum check size. And so actually they want to invest in funds that are like 250 million or more. Mm-hmm. When those funds are smaller than that, like you can't be an endowment like writing a $1 million check. Like it doesn't make sense for the time it takes to diligence a fund. So I guess what I'm saying is that it's still hard. I don't know specifically about
I think like a funny thing that I would say on this is like seed is expensive and competitive, which would make it seem like, I guess it's a good time to be in seed, or it's like it's crowded. But like obviously some of that is from the mega funds and the multi-stage funds participating in seed as like an option call. And I think a lot of the pure seed investors feel like it's overpriced. So it's this weird moment where seed is comparatively hot relative to the other rounds, but few people in seed feel like, oh, it's a great time to be a seed investor.
I feel like that's always the case, though. Like I remember writing a story exactly about this when I was at TechCrunch, and I think like this narrative is always there, where it's like the big guys are taking all the deals and they're marking everything up, and it's so hard to be in seed. And I just think it's always the case. It's like the big funds do always want to get in early.
Yeah, right. Everyone complains that the big funds are jumping into demo day and pricing up all the like buzziest YC rounds.
Yeah, we're about to have Y Combinator demo day. Exactly, we're heating up for the YC companies are overpriced narrative just now.
Million valuation.
Everyone starts texting me frustrated messages about this is ridiculous.
Yeah, there's always drama.
Kate, did you see, as you were talking to people for this story, a particular asset class that got cold feet around tech and being an LP? I mean, the endowments are still probably the single largest across the board backer of these funds. I doubt that's going to change anytime soon. But like, was there at the boom time a certain type of unlikely investor or LP that was starting to back these funds? Then as things started to turn, just completely disappeared.
The high net worth individuals are usually the first to kind of step back, just because they have a lot of exposure to the public markets. But I mean, the endowments, like this is a really unique time. Like Harvard is at war with Trump right now. And while I'm not saying that directly relates to Harvard's venture capital fund investments, like it makes them more risky.
No, people are nervous about the endowments pulling back. Like that's going to have a huge trickle down effect.
I have definitely heard about several endowments adjusting their allocation. So doing less, not doing none, but doing less. And that has, like he just said, that has huge impacts to the ecosystem. So it's a kind of the same thing as we were talking about earlier. Like it's really hard to point to specific examples with this stuff because it's all so hush hush behind closed doors and there's no proof. But like, I think we can expect that a lot of endowments will do a lot less.
The big X factor, and everybody's still trying to understand this. We just saw the sort of everybody goes to the Middle East thing, Tim Cook's getting shit on for not going. But it's like, does sovereign wealth of various forms come and save everybody? Endowments and, fund of funds in the US are seen as the rational investors. does sovereign wealth come in and like who cares about returns and give everybody money? I find it so hard to like, it's like, oh, the funds that do well will get their, rewards, and the ones that don't will get their just desserts, when it feels like you have sovereign wealth sort of investing for relationships and not, non-financial reasons. It's like hard to tell a sort of, I don't know, morality play around a venture performance, or how do you think about it?
I don't think sovereign wealth is coming and saving firms. I don't. I think there's been this narrative for a long time that it's dumb money. And I do think that has changed, and people have realized that obviously there's dumb people everywhere, and that's beside the point. But like, people have realized that it takes years to develop those relationships. It's a really long process. You can't call them and be like, I'm struggling to raise money.
Harvard's out. Come in, Piff,
or
whatever. Yeah, exactly. Right.
And actually, like, a lot of those sovereign wealth funds have made their bets. And there was that period which we all wrote about, which was like 2 years or something, where everybody was going to Saudi Arabia all the time. And I think people are still going, but I think that a lot of those sovereign wealth funds spent the time then, made some investments, and like, now a lot of them want to invest directly in like the LLMs and other AI companies.
Right. Like, so, they're starting to back, the companies themselves. They don't need to go through the VCs. Yeah.
Right. Yeah. I had an interesting conversation with someone about that recently, and asking about, sovereigns as LPs. And this was someone who was a VC in the Middle East. And they're like, venture capital is not that important of an asset class. I know we think about it as an incredibly important thing, and it's part of this cool, sector of the American economy, and it's the new, next generation of companies. It's relatively small compared to private equity, compared to the other things that sovereigns invest in, like buying ports or sports stadiums or teams or things like that. And so, I'm interested to see, maybe you've heard a bit about like, if it's just like you kind of don't really rate as a VC firm if you go to the Middle East and hold out your hat and expect them to just put money in.
But isn't that, to me, that's the opposite. It's like venture is so small that like they can save it if they think it's an interesting space with people they want to hobnob with, or I don't know. Kate, what do you think?
If a fund needs saving, you don't want to invest.
Yeah, it's not cool.
Clearly they're not good enough, and I don't think the sovereign wealth funds would want to do that. And my guess is like that most sovereign wealth funds are not interested in emerging funds at all. They're interested in like Andreessen, which
where they can write huge checks.
Yeah, exactly. That's really important. So
they're not like, oh, I'm going to be the anchor LP for this $30 million seed fund.
I mean, founders are the lifeblood of Silicon Valley, but after that, emerging managers are a core part of the ethos. I did see Hex data analysis company with a cool CEO, Barry. He raised from her new fund.
Yeah.
I thought that was an interesting, like, example. I feel like the founders who know, will be like, okay, you're going off on your own. You're sort of an emerging manager. I have a good reputation. You have a good reputation. I don't need like the big brand. I feel like that's Silicon Valley at its best, when like the sort of person really matters. And it's like they can be off on their own or at the big firm. It doesn't matter to me.
It's certainly a huge calling card if, Elad Gil is on your cap table, or Nat Friedman and Daniel Gross, which I know we've talked about are actually quite larger than, just solo and angel investors. But it does seem like there still are these personalities that can sort of command this and have sort of this kind of upstart feel.
And founders do like them a lot. Like Eric was saying, like founders are drawn to that. And also, I think in this environment, people really like it when somebody runs the fund, because there's been so much personnel changes at these VC firms. And it's like, either you could like go into business with Sarah Guo, who like clearly is calling the shots at the fund, or you could like work with the GP at Andreessen, who
she's dominating. Like that's a fund that's crushing it, right? I mean, it's a fairly new fund. When we look at what companies we want at Cerebral Valley, I feel like convictions in
everything,
so many of them. But if the narrative is like, okay, it's the bad time to be an emerging manager, relatively better time to be in a big fund, does that mean that we're swinging back to a time where like brand carries the day? Or do you think, if you're doing a deal with Andreessen, most founders who are savvy still care about like the particular person? Or how much do you think it's like, I'm looking to raise money from General Catalyst Andreessen, or it's like, I'm looking to raise money from David or whatever at Andreessen?
I'm curious what you think, but I think when it comes to the mega funds, it's not really about the people. And I don't, obviously, if it's Mark Andreessen, or if it's, there's few people that like really matter, I guess, at those firms, but like that's one thing. But I do think generally when you're raising from those
Right. You're raising from the platform.
Yeah, like you're raising from the platform, and that's a signal that you wanted because your customers might know those firms, whereas they might not know like conviction. Do you agree? Or do you think like those GPs at those firms are really known enough that they carry that weight?
I mean, I think if, founders are asking for my opinion, which is what it is, like I would want a partner where it's like, I like that partner, I trust them, and I believe that they have pull within their firms. But I agree that often when you get, one of these huge firms backing you, the appeal is like they have whole teams, they have a lot more money, they could potentially like follow on. And, and there are cases where it's like firms keep coming back round after round and like are useful and bring connections. But then it is like, I'm thinking of particular examples that I don't want to name. And it's like, I don't know, like the loyalty of the particular partner can matter a lot. It's like, does that partner and your board member actually like drive bringing the money back or not?
Yeah. I mean, it just depends on the founder and what they want. Because most founders like don't really want the VC to like actually do anything. They just want
sure. They want them to be a capital allocator, but that's
fine. Like, they don't really, right. The rest of it is kind of annoying. But there are some founders who like maybe just really do need support in various areas. And like, that's cool. But I do think most founders I talk to, like, they don't care about any of the stuff we're talking about at all. They just care about whether they can raise money or not.
They want signal, right? I mean, you think most founders are just like price optimizers. I think there's still like signal.
Yeah, I think so. But I just mean like they usually just don't care about kind of like the particulars. Like, let's say like the politics of a certain firm. Like there's been controversies within Andreessen, right, over the years. Like when I've asked founders about that in the portfolio, they're like, huh? Like,
right. Well, they never care about, the little controversies that us reporters care about. You're like, what? Yeah. They're in hot water for XYZ. It's like, oh, do they have a lot of money? And like, do they do a lot of stuff? And like, yeah.
But yeah, the signal matters. I agree. The signal definitely matters. And that's why you go into business with some of these funds, because they will follow on and they will help you get customers. But right. Yeah, I just think overall it's kind of like founders don't really.
Let's make a prediction about where we'll be in 2 years.
I mean, I guess to me, it really comes down to the thing that you were getting at and the whole point of all of this, which is exits, right? Like if there are exits, then there can be a persistence of, this landscape or ecosystem of VC firms, of like, mid-tier VC firms. And if there aren't, then they're going to die off. And I hear the argument from time to time that like, private sales and things like that will give people liquidity, so you don't really need an IPO. But that's not really the outcome I imagine most founders and most employees wanted when they got into a company. Certainly not if a VC is, basically selling off to someone else. I think it's going to be rough if we don't see IPOs, and I think it probably will continue to decline.
Private tech, you think will be in decline in 2 years?
I think so. I feel pretty confident saying that, and with the caveat that maybe AI can pull a rabbit out of the hat and create, this next wave of internet, new platform, whatever you want to call it, that would create a whole ecosystem and new, revenue streams and companies that can kind of live off of that. But absent that, I don't see why it wouldn't decline.
Going off Tom's, like, it may not be as much in decline as he thinks, just because like companies are already developing all this infrastructure around tender offers and it's becoming the norm. And I think that will just be what everyone does if the markets really do continue in the direction they've been going on. Because opposite of a prediction, but like I don't think we're going to have some major AI IPO in the next 2 years. Like that doesn't seem at all where we're headed at this point. So I don't think there'll be that liquidity. So as a result, what I do think will happen is tender offers will be the norm at every single company, and that's how you cash people out. That's how you cash out investors and employees, and you keep people happy as long as the markets continue to be this frozen as far as IPOs.
But why would you throw good money after bad? Because someone has to hold someone has to hold the bag for a tender offer, right? I mean, there's like outside capital coming in buying these shares. Don't at some point you would think, well, I don't want to buy at this price. I don't think I'm going to end up with a good return if I were to buy these shares.
Yeah. I mean, the secondary market, trades down and people react to valuation. Madeline, you want to make a prediction?
Yeah, I have a prediction. I think we're going to see another one of the sort of like second tier of the mega funds, like not quite the GC Andreessen size, but like ones that are kind of playing in that space, like a Thrive. I think we're going to have a new one that will sort of enter the canon of like megafund doing other financial products besides VC. I mean, Thrive is already doing this, so my money is that it's going to be Thrive, but I do see like with the big guys getting bigger, I think there's going to be another firm that gets like solidified in sort of like that banner of doing something else in venture that's not just like traditional venture.
Like Founders Fund could if they wanted, it feels like.
Founders Fund always could. They have amazing returns, but I feel like they don't want to do that in the same way. That would be, like too consensus for them.
And they've traditionally, Peter has just done, separate firms if he wanted to do other strategies. Madeline, I think that's an interesting prediction. Anyway, Kate, any prediction?
I mean, I think that we will see a lot of these mega funds, even though, yes, they're doing well and they can raise money, I think they'll get a lot more creative about who the LPs are. Well, not creative. I think basically what will happen is a lot more of these firms will pursue like public pension funds, things like that they've avoided because that makes their returns public, which is great for us because then we can actually see how they're doing. But I think we'll start to see
return bonanza. They're getting out anyway. They're already going to bankers and getting them sent to every wealthy individual in the world. Yeah.
Right. Yes, exactly. But that shows you that it's a lot harder. So I think we'll just see kind of like them seek out other types of limited partners.
Yeah. I'm bullish overall. I feel like I disagree with Tom just in that, like, I feel like every sign is that technology remains core to what's happening in our economy. Like, I think there's a lot of value to be extracted from generative AI. I think the core themes are doing well. So to me, that just means like this stuff will get sorted out. Stripe, SpaceX, solid companies generating in some cases profits, like maybe they're priced off like 10, 20%, but not in a way that's an existential crisis. I think clearly there are a lot of like software SaaS investments that like are never coming through. And like, I feel like the biggest risk factor is just the sort of like, I don't know, $2 billion unicorn. Like how much does your fund hang on this like startup that was valued super highly in 2021? Like those people, if they haven't like stomached the loss yet, are clearly in trouble. But hopefully, you YOLO'd into OpenAI at the right time, or you figured out some AI investment and you make it to the next wave, or you didn't. But I feel like this wave is good, but it killed a lot of the old guard. But overall, I think I'm still bullish just on a pure like, this thing lives or dies based on the actual promise of the underlying technology. And there's a lot of exciting stuff coming out of generative AI.
That's great news for a newcomer.
Now I get accused of talking
That's
my own
great news
book.
for Cerebral Valley.
Yeah.
Okay, you were nodding. What is your take?
No,
or like, do you agree with that or not?
I don't like think about it like, oh, I'm optimistic or pessimistic, but I just think that there will continue to be a lot of funding to private companies. So I agree more with you in that, and that I don't think that in 2 years there's going to be some massive depression for startups. Like I think things will continue to be, there'll be a ton of activity as long as this AI boom stretches on. Like maybe unless something like OpenAI or Anthropic like implodes.
Right. It would need to be like existential. Yeah.
Yes.
It would need to be
that would
like
be what would, I think, change things. But I don't think that's going to happen. We already got close enough with the Sam Altman saga, 2 years ago at this point, or
almost 2 years. Two years in October, November.
And Tom, I mean, you did the story. Basically, we're saying this whole hype cycle is predicated on like foundation models like not collapsing. And you did a story like soon after starting to write for us. There was like, actually, yeah, there's some revenue there. They're not. It's not so ridiculous. Or like,
right? No,
are you recanting?
No, I'm not. I'm not. If you recall my argument was like, yes, if AI continues on its trajectory, not even continues on it, they have major financial structural problems. Anthropic burns billions of dollars a year. OpenAI burns billions of dollars a year. I understand these companies are too big to fail right now, and they can probably continue to raise money increasingly from sovereigns to persist. These aren't great businesses right now. Like we can talk about their revenue and the potential impact that they have on society, but like, let's get these fucking books together. Like every other industry would look at the burn rate and say
I learned this whole thing covering Uber, and it was like, oh, they burn so much. They burn so much. I
mean, this is just how startups do things, right? Like we've been through this before. We've seen the movie before. Like when you were asking about like, oh, what was the peak period for fundraising or something, like my mind immediately went to the scooter era, which is like, for me, very
oh my gosh, I haven't thought about the scooter era in years.
Well, that was when I was really first starting out reporting. So like I always think about that because I remember being so every day my mind was being blown by these valuations. I mean, you guys remember like
OFO, yeah, that was the housing one.
OFO,
Yeah.
like it was just crazy. And since then, we've had multiple.
And that was like transparently insane. I don't know. I know like Ruloff and people believed in it, but it's like it didn't make any sense to me. Like, I mean, the risk with models, which we've talked about endlessly, is that like when they're cheap to deliver, do you no longer have a moat? And therefore, if it's cheap to deliver and you can make a lot of profit, everybody has it, and therefore you're not differentiated. That to me is the like terrifying case for OpenAI, that it's either really expensive to deliver, you don't make money because you're differentiated, or it's cheap to deliver and you're not differentiated. But
yeah, and I want to be clear. I'm not on like the full extreme side of like the Ed Zitrons of the world who think that these are full on, house of cards that are about to collapse. I think they have much more value than its critics would be willing to accept. I just think it's a major structural problem that we really haven't seen at this scale before. And, I also I covered Netflix, and I worked with a certain editor who I'm not going to name here, but we all worked with him too.
Yes. who made his career, not his career. He's done a lot of great things, but a huge rallying cry of his was like, this Netflix thing, it's not going to work out.
Right. And not only did it work out for them, they figured it out sooner than the traditionals.
Yeah, exactly.
Yeah,
Netflix was right and everybody else was wrong.
Right. They figured it out sooner, and they got their books right faster. And the media companies that all jumped on afterwards ended up having to burn a huge, anyway, total catastrophe. So we've all seen it before, but this is tough. I really think OpenAI is it's not going to be an easy road to figure it out, and we should be skeptical of it until they do. But I agree with you. Look, if these companies do end up becoming trillion-dollar, entities, as Sam Altman apparently, as the Wall Street Journal reported, expects, just their hardware division to be, then sure, it's going to be a financial bonanza for the industry. If you can create a new trillion-dollar company, all bets are off. But absent that, man, it just everything that you wrote about, Kate, and the software companies and things like that, it's not going to be easy. And maybe to close off this part of it, I'm sure all of our sources have told us in the past, expect a die-off. There's going to be some sort of reverse Cambrian explosion in the next year or so, where we see all these firms that raised in 2020, 2021 aren't going to be able to make it. And it hasn't happened yet. So
I know we're into year 5 of this at this point.
Yeah. It's not going to happen. It'll never be all at once like we would like it to be.
Right. The media's reputation is that we love to write about failure, but we hate to write about slow failure. And, a lot of these funds and a lot of these companies, they're dying very slowly. And by the time they really die, who cares about them anymore? And so honestly, it's totally. A lot of things just fade into non-being. And unless you die in a splashy way, it doesn't sort of penetrate the narrative in quite the same way.
Yeah. And usually if you die in a splashy way, you got to start a new company anyway. So
if you can make your death splashy, then you're like, this person knows how to stay in the headlines. Let's give him another shot. Adam Newman, back at it.
I was about to say, shout out low.
All right. I wanted to end. Elon Musk is walking away from DOGE, something we've talked about fairly extensively on the podcast.
Can we queue up that, remember on American Idol when they would kick people off and they would play a bad day, like Daniel Powder, Bad Day?
You had a bad day. We just need the montage. Can someone make the edit real quick?
The montage of Elon walking out of his little fake office in the White House. Yeah, I mean, look, it's his time as a special government employee seems to be ending, but not before he seems to be shitting on everyone on the way out the door, including the big, beautiful bill, and saying that it defies everything that he was working for in DOGE, which is really an easy way to say that DOGE failed, and he can just blame it on the big, beautiful bill. The media played an interesting role in all of this. And I not to make everything, through the lens of how we write about stuff, but there was a lot of triumphalism I saw on the tech crowd after Trump won, basically saying the traditional media is dead because Trump, who was abhorred by, mainstream media, was able to succeed. And you have all of these, whatever you want to talk about, you give your example of what you think new media is, podcast, let's say,
right.
Winning, that traditional media died. And of course you saw, with the New York Times and the Journal and everyone, Wired in particular, was really just bagging on DOGE throughout its time, to a point that it was, Elon lost huge amounts of credibility and
right.
approval ratings and all that stuff. I'm interested to see how, as we kind of start to accept the fact that DOGE was a failure, as its significant dwindles in Washington and Elon goes back to the private sector, who the blame will be on for DOGE's failure.
In some ways, it sounds like what you're saying is elite media, pat yourself on the back. You can still tear down an American hero if you.
I think so. I think so. I think you will find that the tech people will be the first ones to say it was killed by the media.
Sure,
they're going to say it was a full-on assault.
If everything in the world now is like, just like power and how much you can influence things, in some ways it circles around. It's like, okay, well, I guess the media still matter. It's such a nihilistic time.
Well, here's my question. Which is it? Does the media matter or not? Because if it doesn't matter and it allowed Trump to win, that's fine. Stick to your thesis. But if it also killed DOGE, which I imagine is what you're going to start hearing people say, then clearly what you were saying at first wasn't true. So I'm just begging these people to pick a side. I don't know which side I fall on, honestly.
The other contradiction of this, which I think is very related to what you're saying, is that the media, DOGE is terrible. They're firing everybody. It's the end of the world. And now the takes are like, he didn't do anything. He didn't succeed. So there is sort of a incoherence also in sort of the media story of whether this was a big deal or not.
I think I've seen smaller examples, but some more, I would say, balanced coverage, which is that, like, this is, they didn't do as much as they claimed they were ever going to do, and that never happened. But, like, they did still do, like, quite a lot. And, like, what has happened with DOGE and the government, like, will change a lot of how things operate. But they didn't really, like, it comes down to, like, they didn't really cut, like, that much waste, because, like, the bulk of the waste comes from stuff that people don't want to touch. So, or, like, not waste, but spending, I mean,
they wanted to.
But they didn't get to.
I mean, once you have people freaking out about their Social Security checks, I think it gets, infinitely harder. And, at least it gets material. Kate, what do you think? I mean, talking to founders, maybe people that are closer to that persuasion, is the feeling on Elon changing at all? Have you gotten a sense that people are like, maybe he overstepped his bounds and he should just stick to being, one of the greatest CEOs of all time rather than anything more than that?
No, honestly, I think people really believe in Elon still and think that, like, I mean, I don't know how much people have changed their minds in the last few days or the last few weeks, but, like, I think that I've learned that kind of regardless of what he does, he has a huge army of fans that just really believe, especially in his efficiency approach. Mm-hmm. I haven't seen that falter. But what I'm interested in is seeing, now that DOGE is kind of disbanding and that chapter seems to be over, like, what are people like the Andreessen people who went and joined up that? What do they have to say about it? Like, I think there's been a little bit of trickling of blogs that are coming out, and people are going to start talking, and I'm definitely going to be listening to hear kind of what the story of the inside of all that was like.
One good thing potentially to come out of this, though it's been horrible and mostly bad, is that I do think Elon in some ways will have to acknowledge that doing things in government is different than doing things in the private sector.
True.
I think there was this sentiment that it's like, oh, we'll just bring the Silicon Valley ethos to government and we'll solve all the problems. But actually, you do have to, like, get Congress, and even in an executive that's, like, trying to wield as much power as possible, you have to, like, get all these different parts of the executive to be aligned with you. It's not just sort of like, it's not like running a company. And so I think that is a lesson that needs to be learned if we want to make actual sort of change and understand how government operates. The other thing I just want to say, because we sort of started from a meta point of view, but I do think, what Elon did was absolutely terrible. It's like people are literally going to die from not having USAID. Like, he made all these extremely disruptive cuts for basically no benefit, saved basically no money, and just sort of messed up the government. I
mean, cutting the CFPB is going to be very bad for a lot of businesses operating anyway. We talked about that at the summit last week.
Right. So the story is going to be like, he failed, but it's like he did cause a lot of problems along the way. And, like, man, you would think someone empowered to make so much drastic change in how America works would have better understood what he was trying to do before he started it.
Yeah, I also wonder how much the gap between vision and actuality and bringing a Silicon Valley mindset to government didn't take into account that popularity matters. And you have to actually
Trump
win people
understands
over.
that. He needs to be funny.
Yeah.
People need to like him. Yeah.
Right. I mean, like approval ratings. I know, like, for example, Facebook used to, I don't know, or Meta, Facebook, whatever, used to measure like Zuck's approval ratings and how much the
Back
users
in the
thought
he's
that
running
Facebook
for
cared.
president days. Yeah.
Yeah. Or, how much people thought Facebook cared about them. There was like a whole metric about that. But that's fairly rare. And for the most part, they don't mind barreling through and making the changes they want, and failing fast is sort of a version of that. And the political realm just doesn't accept that. Like, you have to roll into your vision the fact that you have to win people over to your side.
Because in business, you need your true fans. Elon doesn't need everyone to love Tesla. He needs enough really passionate people. We don't. We need, the tiniest subset of people to love newcomer. But obviously, if you're representing America, you need to be more generally popular. If you want to appeal to the politicians, that you need to do things who are worried about getting reelected.
Right. And I think one of the bigger mistakes that they made, aside from just DOGE as a concept probably being unpopular, is that the figureheads of the Trump right movement, the MAGA right movement, went about it in a very trollish way. They thought that if they could piss enough people off, they could be vindicated in their process. And I think it just got to be very unpopular because these people are unlikable figures for the most part. And the approval ratings show it to be the case, right? Like, Elon's approval ratings are extremely low. Zuck's approval ratings are extremely low. I don't know where David Sachs is at, but I can't imagine it's great.
If people in the general public have heard of David Sachs, I wouldn't peg it as in a positive light at this point.
Yeah.
To end on a happy note, if you're an LP listening to this, go support your local emerging manager. They need your support right now. It's a dark time, and these poor emerging managers need your help. So we're
Eric, you're doing the ASPCA ad for emerging managers right now.
Poor emerging, exactly.
Call now.
Now we're piping in Sarah McLachlan. We can get Arms of the Angel. Kate, thank you so much for joining us. We're all such huge fans of your reporting, and you're a fierce competitor too. So
hopefully many more times. Thanks for having me.
Thanks.
Man, if you've been saying, I've had enough of Madeline and Tom, I've got good news for you.
Are we fired? Jesus.
See ya.
Oh, yeah. Business Insider had layoffs.
Yeah,
No,
geez.
careful.
Jeez,
That's a horrible way to find out.
Oh,
on the
my
podcast.
God. All right.
This is harsh. Yeah.
Someone call Mark Stenberg quick.
We're pivoting. We're going to the Cerebral Valley podcast for the next 3 weeks. Max Child and James Wilsterman, the co-founders of Volley, and my co-hosts at Cerebral Valley, will be helming the podcast with me. We'll be talking about everything that's happening in generative AI ahead of the Cerebral Valley AI Summit in London on June 25th. And then Tom and Madeline will be back, so stick around.
We'll still be here. Subscribe to the newsletter. You'll see our names.
Go live on Substack if you have if you
why
feel
not?
like your opinions
Sure.
are being denied. You guys have endless ways to reach the listener here.
I'm just going to go to the Mike Solana podcast for this.
Oh yeah, go on Pirate Wires.
I'm just going to go right to Pirate Wires.
Godspeed.